In today's video, we'll talk about how rising prices, stagnant incomes, and rising rents have made the housing market unsustainable for many individuals. If you've ever heard of Blackrock, you know it's the largest asset management in the world, in charge of over $10 trillion in assets, and it has an expanding impact on our daily lives, sometimes in unexpected ways. The sad reality is that the housing market is in complete disarray. 70% of those who desire to purchase a home in the United States alone can no longer do so. The same thing is happening in the UK. One of them involves a product known as mortgage-backed securities. To put it briefly, BlackRock and other investment banks gather mortgages from various lenders and offer them as investments to investors seeking a return on their capital. While it may seem like a good idea, some significant risks are associated with this approach, which might ultimately result in the homeowners losing their houses. Now, let's uncover the power behind BlackRock and discuss why you could lose your home in 5 years. Although it isn't a topic we would usually discuss, it is a serious problem that impacts all of us. A few companies, including BlackRock, Vanguard, UBS, and Blackstone, have acquired $60 billion worth of the housing market, which has priced out average people and made the problem worse. Some businesses have profited from the housing crisis by purchasing foreclosed properties at a discount, refurbishing them, and renting them out to deserving families. The actual worth of the house has also been profitable for the corporations, and the houses may be used as collateral for loans. This alone has exposed the fact that the entire housing system is on the brink of collapse. The US and UK housing markets are in a dire state, with 70% of people who want to buy a home unable to afford to do so. As earnings have stayed below the inflation rate, house prices have doubled relative to inflation in just 2 generations. Homeownership has become a faraway dream for many due to rising mortgage rates. Those unable to purchase are being squeezed by exorbitant rents, which are projected to rise by an average of nearly 8% this year. In 2022, institutional investors, up from 12% the year before, bought roughly a quarter of the homes listed for sale rather than the families that needed them. 15 years ago, Wall Street bet on mortgage bonds, which provided returns based on average people paying their mortgages. When the housing market collapsed, the bank's favorite mortgage bonds saw a significant decline in value, throwing the entire world's financial system into disarray. Instead of investing money in mortgage bonds and profiting from the housing market that way, Wall Street saw an opportunity to earn a fortune by purchasing homes instead. Thousands of foreclosed homes that were sold for as little as $50,000 to $60,000 were made available almost exclusively to institutional investors. Before renting them out to low-income families, investors had to invest in improvements. Families might invest more money in the home's purchase over time, eventually resulting in home ownership. This plan's fatal mistake was assuming that all Wall Street investors wouldn't take advantage of the system as they did a few years prior. These foreclosed homes were purchased with millions of dollars from Wall Street, and within 6 years, over 200,000 foreclosed homes were purchased with $36 billion from Wall Street. Thousands of businesses were established to benefit from the gold rush, purchasing thousands of these cheap homes at a time. Invitation Homes, which owned over 80,000 single-family homes at its peak, was the largest company to take advantage of this. They eventually incorporated into Blackstone, a large investment company with assets worth nearly $1 trillion. As these Wall Street companies profited from the home's true worth, the renters paid the actual mortgage costs. These already discounted investments became incredibly profitable thanks to the increase in home values. The residents could be used as collateral for loans, giving these businesses millions more to invest in whatever they desired, frequently purchasing more properties. As a result, Wall Street has put the entire housing market system on the brink of collapse. Those who need homes are being priced out of the market, and rents are rising so quickly that those who can't afford to rent are being squeezed for every last dollar. Due to these huge investment companies' dominance and their ability to control the housing market, home ownership has become a distant dream for many. If this continues this way, in only 5 years, a small group of companies will own every home, bringing in a nightmarish society where only the wealthy may own real estate. Who will most likely be affected? Worrying that you might lose your home in the next 5 years is a valid concern given BlackRock's expansive global power and how it has left homeowners unsettled. Here's an overview of who is in danger of having their homes taken away by BlackRock. Homeowners whose mortgages are backed by mortgages held by mortgage funds owned by BlackRock. Homeowners whose mortgages are owned by a BlackRock-managed investment fund that has been packaged, sold, and held as scrutinized bonds. Property owners whose mortgage loan servicer is within BlackRock's control. Regardless of which group you fit into, it's important to understand that BlackRock has the authority to decide at any time whether or not to foreclose on your house. Also, they can change the loan's terms or decline to do so, forcing you to make difficult choices regarding how you make payments. Solutions moving forward to mitigate the effects. The most obvious option is to invest money in more established investments where you won't take on debt. For instance, you could invest in stocks of tangible goods like gold, silver, or real estate. These investments might be more volatile than debt-based investments like bonds, but interest rate changes are less likely to have an effect on them. Investing in local companies is another approach to reducing the risk associated with BlackRock. By doing this, you may benefit the local economy by putting your money back into the hands of those most directly impacted by BlackRock's decisions and practices. Also, it aids in portfolio diversification because local businesses typically have lower correlations with the stock market. BlackRock is a cunning force, and all of its activities, investments, and business dealings are based on using billions of dollars worth of assets owned by homeowners to generate profits. As a result, homeowners risk falling behind on their mortgage payments in as little as 5 years, putting them in a difficult situation. We all need to know BlackRock's power and how its decisions may affect homeowners. In order for homeowners to have more influence over the decisions made by BlackRock and other groups of companies, we must take a position and demand greater transparency and oversight. We must ensure that homeowners' interests come first and that we don't let those with the most financial power control our housing situation. If you enjoyed this video, please subscribe to our channel and give this video a like.